Get a little education for you right now from our friends over at creditsanitizer.com. What is a FICO score? We're going to be giving you this segment quite a bit coming up because we got to get some education out there onto the FICO score because I know how much it's costing you and your family understanding this. A FICO score, 3-digit number based on the information in your credit reports. It helps lenders determine how likely you are to repay a loan. This, in turn, affects how much you can borrow, how many months you have to repay, and how much it will cost. That's the interest rate. When you apply for credit, lenders need a fast and consistent way to decide whether or not to loan you money. In most cases, they look at your FICO scores. You can think of a FICO score as a summary of your credit report. It measures how long you've had credit, how much credit you have, how much of your available credit is being used, and if you've paid on time. Not only does a FICO score help lenders make smarter, quicker decisions about who they loan money to, it also helps people like you get fair and fast access to credit when you need it. Because FICO scores are calculated based on your credit information, you have the ability to influence your score by paying bills on time, not carrying too much debt, and making smart credit choices. 30 years ago, the Fair Isaac Corporation, FICO, debuted FICO scores to provide an industry standard for scoring creditworthiness that was fair to both lenders and consumers. Before the FICO scores, there were many different scores, all with different ways being calculated, some even including gender and political affiliation. Why are FICO scores important? FICO scores help millions of people like you gain access to the credit they need to do things like get an education, buy a first home, or cover medical expenses. Even some insurance and utility companies will check FICO scores when setting up the terms of the service. The fact is, a good FICO score can save you thousands of dollars in interest and fees, as lenders are more likely to extend lower rates if you present less of a risk for them. And overall, fair, quick, consistent, and predictive scores help keep the cost of credit lower for the entire population as a whole. The more accessible credit is, the more lenders can loan, the more efficient they can be in their process to drive costs down and pass savings on to the borrowers. What is the difference between a FICO score and other credit scores like FICO scores, Vantage scores, Credit Karma, Credit Sesame? Only FICO scores are created by the Fair Isaac Corporation and are used by over 90% of top lenders when making lending decisions. Why? Because FICO scores are the industry standard for making accurate and fair decisions about creditworthiness. They help millions of people get the credit they need for a home, a car, or a special purchase. You may have seen ads for other credit scores or likely even purchased them in the past. These other credit scores calculate your scores differently than FICO scores. So while the other credit scores may seem similar to the FICO score, they are not. Only FICO scores are used by 90% of top lenders. What is a good FICO score? Every lender determines for themselves what is a good FICO score and how they will use a FICO score and other information within the loan process. In general, many lenders find scores above 670 as indicating good credit worthiness. Typically, the higher the score, the lower the risk, and the more likely creditors are to lend to you. There are general score ranges recognized by creditors to help them make lending decisions. These ranges can also serve as goals for you to achieve. The information in your credit report is continually changing, which means your FICO score is also updating frequently. Under 580, that's poor. Your score is well below the average score for U.S. consumers and demonstrates to lenders you are a risky borrower. 580 to 669 is fair. Your score is below the average of score of U.S. consumers, though many lenders will approve loans with this score. 670 to 639 is good. Your score is near or slightly above the average of U.S. consumers, and most lenders consider this a good score. 740 to 799, very good. Your score is above the average of U.S. consumers and demonstrates to lenders that you are a very dependable borrower, and 800 above is exceptional. Your score is well above the average of U.S. consumers and clearly demonstrates to lenders that you are an exceptional borrower. That is just a little bit of education for you. That is our Credit Sanitizer report. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets.